Hi, it's March 21st. This is the BAM Weekly Muni Market Update. I'm Mike Stanton here with Chris Flossie from BAM's Capital Markets Desk. Chris, thanks for taking some time this week.
Hi, Mike.
So coming this week, all eyes were on the Fed. They had their meeting down in D.C. Everyone expected them to stand pat on rates. They did that. People were also looking for more insights into what they're thinking about rates going forward into the rest of the year. What did we learn?
As we've seen with other meetings recently, it's all about the language of what they're saying. So I think that there's still a lot of focus on the inflation numbers to see what happens with those. I think they're coming down a little bit, but I think it's really going to be the data going forward to see what the outlook is.
And overall in the week, the Treasury market had a pretty strong week. Munis also stabilized. Yields were a little bit lower after 2 weeks of losses, but ratios crept up. Munis are still underperforming Treasuries.
I think overall, but for the week, there was some outperformance versus the Treasury market. We saw yields in the muni market bump anywhere from 2 to 4 basis points, depending on the yield curve and where you're looking.
And of course, on the fundamental side for munis, another week of outflows, although it was a pretty modest number, not heavy.
It wasn't heavy, but it is a second consecutive week. I think it's going to be interesting to see what happens now through tax day on April 15th, just to see if the outflows persist or if we get some money coming in.
Yeah, we talked about that with your colleague Grant last week. Grant Dewey mentioned that it was a little bit early to see the tax flows starting, but certainly as we get closer and closer to April 15th, that's going to be a bigger part of the story.
Agree.
How did the new issue market perform this week?
So there was a $10.6 billion calendar this week, which is honestly pretty rare for Fed week. Usually we see a more muted supply number. But talking to some underwriters and some deals, we didn't see many hiccups with placing deals at acceptable levels. That combined with, you never really know what's going to come out of Washington on any given day. So with things being placed pretty easily, I think the market did okay.
Anything stand out on the BAM-insured calendar? I think it was a pretty active week, right?
We had an active week. It was 14 series across 7 states. The total par this week was roughly $280 million. The headline deal for us this week is RBC priced a University of Cincinnati health transaction where BAM insured a $125 million taxable QSIP. And there was also a $61 million competitive sale that Truist purchased, and that's for the Nevada System of Higher Education. And that's a name that comes to market pretty frequently, and it's not a traditional user of insurance. So it was nice to see some execution there.
AA minus underlying rating on that, I think.
Correct.
And looking ahead to next week, calendar comes down a little bit. Any deals stand out to you?
It comes down. $8.2 billion is expected. There's $1 billion coming for the Los Angeles International Airport. That'll be a combined new issue and refunding transaction. On the BAM side, we have a smattering of deals up and down the curve here, but there's a $48 million Lancaster School District that we'll be pricing with Raymond James.
Very good. Well, thanks for your time, Chris. We'll talk to you soon.
Thanks, Mike. Hope your bracket stays intact over the weekend.